I can speak Russian, but I think I'll be more self-explanatory in English. So let me share with you my thoughts about the current situation on the market. I can only say that I agree with everything that was shown until now. Yeah, I can say thank you very much. I fully agree. Go and sit down because I agree fully with what was announced on the current situation. Was the trend of development that we need omni-channeling. Yeah? I always thought it's multi-channeling, but omni-channeling sounds more sophisticated. Yes, so maybe I will try to fight with this device and make a small quiz. Most of you most probably heard that there was a small meeting with Itzhak Adizes last week, and you heard a lot about the life cycles, economical cycles. So for sure we are not in A, we are not in B. Question, what do we believe in? Are we in D? Sorry, D or C? So who is for C? Who is for D? Yeah, I think that we are optimistic. Yeah, I think that we all would like to be more on the optimist side, and that's exactly the theme of my presentation today, to show basically that maybe it's the right time to think about the opportunities more than about the problems. For sure, the problems needs to be solved, but I think that each time we have the crisis is a good moment for the change. Looking once again at an operational model, I know it's boring. I know no one likes to do it, but we need to solve the past to see for the future and see the alternatives for the new developments. What's the economy? Yes, the economy is as it is. Yes, so the economical growth is in the face of a dream. We saw what happened last year on the GDP. Officially, we lost 7%. Unofficially, we know that it's much more severe because we lost not only GDP but part of the country. Unfortunately, the start of the year was not excellent. And when you look at the first 2 months, it's our estimates. So the construction is dead as it used to be dead 2 years. The industrial production follows the same pattern. But basically, we help the economy to be there. We cut the economy from the lending, so it's like a magic circle. We need to stop turning into magic circle and start changing something. This graph, all of you know, I like the stability in Ukraine. When I arrived in the Ukraine in 2007, I saw very similar stability. That was 5 years of 5 years. And then the more you keep artificial exchange rate, then the more harsh the events happen. And basically you see it happening last year. So we had also like 8. It doesn't help because it influenced the behavior of our customers. I'm not a banker also because I used to work in the bank number 100 and something until the end of last year. I joined Pump like second half of last year, and I'm merging this strange animal called Renaissance credit in the past and with Pump now. So it's a very interesting event to be a retailer working in a serious bank. So you see that the dollar rate doesn't help because it influences strongly the behavior of the customers that we don't like. And we don't like the behavior that results in liquidity outflow. Yes, so basically, when you look at the liquidity, we had the historical value in February. The exchange rate helped us a lot because we just revalued our dollar-denominated deposit, and we had historical peak in the hryvnia equivalent. But when you look in the nominal value, we lost a lot. So basically, what we've constructed, I like to compare this graph with this one. So in my opinion, the financial sector is the first one to feel the beginning of the crisis because all of a sudden, in a few days, the liquidity is gone and is the first, basically, mark of the recovery. So when we see the stability of liquidity and stability of our portfolios, both hryvnias and foreign currency, then we can talk about stability of the market. So we see we work 5 years to build the portfolios. We fought with the consequences of last crisis, again, lack of trust, fear of banking sector. So you spent 5 years to recover, and we lost it within 1 year. We lost it like 50% in a hryvnia's portfolio, and we lost it almost completely in dollar. People basically afraid of us and afraid of our approach towards the security of their deposits. So our key task is really help the customer to trust us again. We laughed during the coffee break that currently the best investment for the future is to let the customer go with the money. He will come back in 1 week, 1 month, 1 year. They need to come back because currently the Ukrainian population sit on a pile of money. When you see the numbers, they are astronomous. So most probably the traditional bankers appreciate currently the business from the bankowskie yaciejki and chraniliścia. So here is the place where the money go. Another favorite phenomenon of crisis is the cost of liquidity. You see the market average here, but it doesn't really reflect the market reality because the market average around 21, 22 consists of two very, how to say it, polar approach. Where on the top, you have the banks actively working for the fundraising, currently offering the rates up to 30% if you calculate the effective rate paid for the customers. And you have the Western banks and the state-owned banks when they are much below 20. So the active acquisition of liabilities today, it's really in the area where we don't want it to be. Why? Because usually the retail banking benefited from the liquidity generated customers and then transferred the funds to real economy, to the corporate lending. There is no corporate business ready to sustain such a level of the cost of funds. At least I don't know many of them, yes? Let's look at retail lending. Ukraine is a fantastic country. In 1 month, we increased the market by 30%, yes? I love that country, really. It seems that we did nothing for the period of 5 years. And then all of a sudden, February last year, some miracle happened, but it's not necessarily a good miracle because it happened for the part of our portfolios that are not highly appreciated. It's called dollar-denominated mortgages and currency loans. Why it's not highly appreciated? Because we see what's going on in Institutska Street, in front of institution called National Bank of Ukraine with Kreditny Maidan and the pressure to solve the problem of currency lending. So basically in retail lending, what was happening last 5 years, we saw that the cash loans or credit cards, yes? That's not the product we would like the customer to have as a basic product with the customer. Finally, my favorite one, what we as a bankers like or dislike about our customers, yes, in terms of behavior. So in terms of liabilities, what we observed, there was a run-on bank. Yeah? I want to say that this is a past tense, but each time we believe it's a past tense, there is a new event stimulating additional outflow of deposits. So what we don't like about liabilities now is that the customer take the deposits, then go to our cash desk to exchange them to the dollars, if we have dollars to offer, or simply go to the store, buy TV, buy car, or what I would like to appreciate the most, put it under the pillow and waiting until they will be able to come back. If they are coming back, they expect the rates that are abnormal. Yes, unfortunately. In terms of lending, what we don't like about lending in the face of a crisis, that first of all, the customer doesn't want to take the loan. Basically, the standard behavior of the customer during the crisis is lack of will to take additional obligation, additional burden. But this is the soft part. What we don't like the most is that during the crisis, the customer has always excuse not to repay. Yes. So when they don't repay the loan, it's one thing. But the worst thing is when he doesn't want to repay the loan because he bought apartment for 5 hryvnias per dollar, and currently the bad bank expects to repay the loan at the current market rate, yes, at 25. So previously, because of the stability and plateau of exchange rate, people think that they live in America, yes, when the exchange currency is dollar. So it's a very painful process that will make our life much more difficult in the future when we would like to come back with the long-term and high-volume products like mortgages. About transaction service, that's the business that left today. what we like when the customer gets the salary, but we don't like when he runs to the cash machine and takes the money out. And unfortunately, that's majority of the customers. That's one of the challenge for us. And I kindly ask you, think how to make the customer use the card in the transactional model. Go to pay with the card for the bread, not to go to the cash machine and think how to go to the open market and use the money. So currently, we are optimists, so we're in a plateau. So the question to us is what we do. We preserve the business model and survive. That's the standard reaction, yes? So what we do? We basically don't lend because we have no liquidity. Yes, we put the barriers on the access to the liquidity by artificial internal regulation or reference to NB regulations saying that we cannot pay you much more than because someone doesn't allow us to do that. Then we try to delay the execution of payments as much as possible. We increase the prices everywhere we can. Yes, that's the standard price reaction. We increase the price of the loans, which is justified by 30% deposit. We increase all the commissions. And we are very creative in the times of a crisis, inventing all the types of the additional fees and commissions. And of course, our infrastructure starts to be a burden. So what we do? We look, we cut what's absolutely not needed. We start to look at absolutely must-have things. So we cut the infrastructure of support departments, we cut the network, we cut the sellers because we have nothing to sell. Generally, we start to think that operational efficiency is not a bad idea, yes, but usually it's too late because operational efficiency is something that should be in the DNA of a banker, yes, especially in the DNA of the retail bank, and we are working with the mass customers. Individual approach is good for the VIP customers. It's not good even for affluent because affluent customer doesn't appreciate the individual approach, he appreciates more convenience than the individual approach. So, do we have opportunity or not? I believe yes, but to use that opportunity, we need to look at the segments of the market that are in the basic need of the customers. I fully agree with the statements that was announced today that the customer needs a convenient transactional platform that helps him to utilize the flows of money he has in the most convenient way. Whether it's done by the multi-channeling, cross-selling, or omni-channeling is the secondary factor. We need to understand what the customer needs. When we look at the total base of the customers of Ukraine, you will see that the basic need is to serve the salary project and to have the access to the optimal platform helping to execute the payments and the transactions. So I think the key challenge for us is to change the mindset from the portfolio management that we used to have. We love to operate. What was the growth in assets? What was the growth in liabilities? How it ends up with the growing of equity? That was the past. I think the crisis is the right moment to change the thinking process from the portfolio management to the flow management. And if you look, there is several flows. I would like to keep the attention on 3 flows. When you look at the first flow, which is the remuneration flow, there is no crisis in Ukraine. This is the basically quarterly payments paid in 2 major flows in Ukraine. First is the salaries paid to the people, and second is the social transfer from the state to the population. When you look at that, we have even a slight growth. There is 3% growth 2014 comparing 2013. So there is no crisis in Ukraine. Or there is area of the economy that we can use as a bankers to construct some kind of a business model. It will not be a conservative banking, assets, liabilities, but there is a flows that we can start constructing something. Another flows, it was mentioned today, these are flows associated with the payments and transfers. I would use only a part of the market that is structured, because in the market there is 2 major areas where there is structured transfers, which is called mass payments, and there is like a spontaneous payments that cannot be organized in the industrial way. So People need to pay for the apartment, they need to pay for the mobile telephone, for the TV, for the water supply, for electricity. And looking at the situation, this market will be a booming market this year because from April we have new rates. So the government with the policies, with IMF, will help us with dramatic growth of this market this year and most probably in the nearest future. So currently we assess this market as 400 billion grivnas a year. There is a piece of revenues that we can earn, even earning 1% of 400 billion. We can construct a small bank out of that, yes? But what we need to serve those payments? First of all, we need the flow of money. So the salary project or equivalent. Here, very helpful project can be card-to-card payment or P2P. Very interesting and fashionable subject this year. So most probably there'll be more than 30% of the banks having that functionality at the end of the year because it helps to bypass the artificial barrier we construct. We love each other, yes, when we drink beer. But when it's coming to the transferring the money from the customer in Arthur Alpha Bank to Sebastian in Pump, I don't think that Arthur is happy letting the money go. So we see that the banks put artificial barriers on the transfer, reaching currently 3 to 5%. The more problems, the higher commission is. So once we have the flow in, we need to have a effective operational platform. Here, this omni-channeling is very, very valid. But in that particular case, omni-channeling means that we need to offer to the customers the effective payment platforms that will not load our branches. We love our customers, but for this particular flow, we don't want to serve them in the branches. We want to offer the customer the self-service areas, either through the mobile payments that are growing rapidly, or in the internet banking, or self-service terminals that became a standard currently. We need to have lean structure to serve that flow. And the last one is, I don't know whether we should be proud or not proud of that flow, is we need to help the customer to get the money from the banking sector. And my wish is to persuade the customer to keep it with the banking sector after that act. We saw what happened last year. So last year we had 32 banks falling under administration. Total amount of liquidity frozen in that bank reached 47 million. So this year we've done better. We have still 3 quarters to fight, but we already frozen in the banking system similar amount. We know the leaders there. So this is one of the factors why our customers don't like us too much this year and in the face of a crisis, because they trusted us, they gave the money. And unfortunately, we don't have some of us doesn't have the ability to repay. So this is the third flow, which is transfers from the guarantee funds to the customers. This is one of the key sources of liquidity in the face of the crisis, because we know that we invest a hell of a lot of money. Like before the crisis, we were investing in cash lending. Currently, we put all the budgets to the deposits. Deposits, current accounts, saving accounts. But in the face of a crisis, there is a proven pattern of the behavior that the customer doesn't trust the marketing and doesn't trust the advertising. People trust more in the relationship and the personal trust. Choice is ours, yeah? Whether we want to be like a Strauss, putting the head in the sand, or we want to use that crisis situation that is stressful, it's painful. But it is, yes? And the sooner we go out of that situation, the sooner we can be focusing on the new market opportunities, identifying new model of the banking that helps us basically to change from the portfolio management to the flow management. And even with the flow management, we can give the customer the reason to stay with us. And the more customers will stay with us, the sooner we'll start to collect the funding that help us to come back again to the portfolio management. But in my humble opinion, I think it will take not less than 1 to 2 years. Thank you very much.